Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LAS Vegas SANDS CORP quarterly report. Las Vegas Sands Corp offers a diverse range of businesses and services through its integrated resorts in Macau and Singapore. These include accommodations, gaming facilities, entertainment options, e.g. celebrity chef restaurants, retail malls, convention and exhibition spaces, dining and culinary experiences. Las Vegas Sands Corp stock price has increased by 10.45% over the past year due to several positive factors. The company's strong Q3 2025 earnings report, which exceeded expectations with an EPS of $0.78 and revenue of $3.33 billion, was a significant contributor. Robust performance in key markets such as Singapore and Macau also played a role, with Marina Bay Sands delivering record quarterly EBITDA and Macau's mass market revenue surging. Additionally, the company increased shareholder returns through its stock repurchase program and raised its annual dividend to $1.20 per share. Analyst upgrades and positive sentiment from firms like J.P. Morgan and Susquehanna further boosted investor confidence. Finally, eased travel restrictions contributed to a bullish sentiment among investors, suggesting renewed consumer strength in travel and leisure spending. These factors combined to drive the stock price increase of 10.45% over the past year. The primary drivers of revenue growth or decline in the given financial summary can be summarized as follows. Revenue growth is primarily driven by increases in casino revenue at Marina Bay Sands, rooms revenue at the Londoner Macau, and mall revenue at various shops. These increases are attributed to higher win and hold percentages, table games and slot volumes, as well as increased occupancy rates. On the other hand, revenue decline is mainly caused by decreases in casino revenue at the Parisian Macau and Sands Macau, rooms revenue at the Plaza Macau and Four Seasons Macau, and mall revenue at shops at Parisian. These declines are due to lower non-rolling chip drop, rolling chip volume, and occupancy rates. The overall net revenues have shown a 12% increase in 2024, but are expected to decline by 10% in 2025. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes between 2024 and 2025. Net income has experienced an upward trend, with a substantial increase of $869 million, 176%, from 2024 to 2025. This growth continued into the 3 months ended September 30, 2025, where net income rose by $138 million, 39.5% increase, compared to the same period in 2024. However, this upward trend was short-lived, as net income decreased by $52 million from $1.66 billion to $1.61 billion. Despite this decline, profit margins have shown stability and growth. The operating income margin remained steady at 21.6%, while the net income margin increased by 10.6% from 14.7% in 2024 to 16.2% in 2025. The consolidated adjusted property EBITDA margin also remained stable at 35.6%. These fluctuations in net income and profit margins suggest that the company's financial performance is subject to variations, but overall, it has shown resilience and growth in certain areas. The company's financial performance indicates a consistent generation of positive operating cash flow. The data provided shows that in 2023, the net cash generated from operating activities was $2,289 million, and this trend continued into 2024 with a figure of $1,819 million. Furthermore, for the first 9 months of 2025, the company still managed to generate a positive operating cash flow of $1,819 million. This demonstrates a stable financial position, allowing the company to maintain its operations without significant strain on its resources. The company's debt level has experienced significant growth over the past few years. The debt level increased from $10,592 million to $13,852 million on page 2, and further rose to $13.85 billion on page 18. Additionally, a new SGD $6.3 billion loan facility was taken out in 2025, contributing to the increase. By December 31, 2024, the debt level had reached $13,689 million. The interest expenses have also seen fluctuations. While there were instances of slight decreases, such as an $8 million decrease on page 59 and a 1.3% increase from $547 million to $555 million on page 60. The overall trend shows an increase in interest expenses due to new debt facilities and drawdowns. The financial performance of the company's various segments and regions has been mixed, with some areas experiencing significant growth while others have struggled. The casino segment saw a notable increase in revenue, rising by 13.7%, followed closely by rooms at 9%. The Marina Bay Sands also performed well, generating $892 million more in revenue. In contrast, the convention, retail, and other segment experienced a decline of 2.7% in revenue. On an international level, Macau gaming operations benefited from a 0% income tax rate, while Singapore was hindered by its 17% statutory tax rate. Domestic operations were also negatively impacted by a 21% corporate income tax rate. Management is optimistic about the company's outlook, with a focus on strategic investments and expansion projects. Key highlights include a significant investment plan of at least $4.47 billion in Macau by 2032, with $4.16 billion already invested in non-gaming projects. The MBS expansion project is underway, with an estimated total cost of $8 billion and a completion date set for June 2030, followed by an opening in January 2031. The company will continue to repurchase shares at discretion and has increased its recurring common stock dividend by $0.20 per share for the 2026 calendar year. Management is confident in the company's balance sheet and liquidity, with total unrestricted cash and cash equivalents of $3.35 billion as of September 30, 2025. Overall, management is committed to driving growth through strategic investments and expansion projects, while maintaining a strong financial position. The company has a history of both paying dividends and buying back shares. In terms of dividend payments, the company paid out $664 million in 2023 and 2024, but surprisingly paid out $526 million in 2025. On the other hand, the company bought back shares to the tune of $1,716 million each in 2023 and 2024, but then increased this amount to $1.31 billion in 2024, before finally reaching $1.72 billion in 2025. That concludes the financial summary for LAS Vegas SANDS CORP. Feel free to comment below, and I will be happy to answer them when possible.